The S&P 500 has crushed just about everything else for more than a decade. Big tech dominates the headlines, and mega-cap stocks have led every rally. But here's the big question as we head into 2025. What, if anything, can finally outperform the S&P 500? Surprisingly, the answer may lie in small caps. With the Fed resuming interest rate cuts, investor rotations picking up steam, and valuation gaps widening, small cap stocks are starting to look like serious contenders. But is this a real breakout or just another false start? Let's break it all down. The data, the risks, and what it could mean for your investments. Let's start with the Federal Reserve. On September 17th, the Fed officially resumed rate cuts, lowering its benchmark by 25 basis points. And that move may be the spark small caps have been waiting for. Historically, when the Fed enters the later phase of a rate-cutting cycle, small caps outperform. These companies tend to rely more on borrowing, so lower rates directly reduce their capital costs. They're also more sensitive to the domestic economy. If the U.S. sees even a modest rebound, small businesses feel the boost first. We've seen this before. During the pandemic recovery in 2020, the Russell 2000 surged more than 92%, while the S&P 500 gained just 29%. In 2003, it happened again, and in 2008, and in 2001. Now that the Fed has resumed cutting after an 8-month pause, many analysts believe we've entered that same stage again. That puts the Russell 2000 in a strong position going into 2025. But it's not just about interest rates. There's also a growing sense that big tech may be overbought and overhyped. Goldman Sachs estimates that over $1 trillion will be poured into AI infrastructure by the major players. But returns are still lagging expectations. That's left many investors asking, is AI ready to deliver? Or are we facing an AI bubble? If sentiment cools, capital will start flowing elsewhere, and small caps are ready to receive it. From August 1st to September 17th, the Russell 2000 rose 11.1%, compared to just 5.8% for the S&P 500. That's a clear sign of momentum shifting. And with sectors like financials and healthcare making up large portions of the Russell 2000, these areas could benefit most from the rotation. Now let's talk valuation. As of mid-September, the Russell 2000 trades at a PE of 18.07, far below the S&P 500's 27.16. That looks cheap, but there's more to the story. Relative to its own 5-year average, small-cap valuations are actually slightly elevated. In other words, they're not screaming bargains, but they're not stretched either, and compared to the S&P, the Russell still looks like a better value. What's important here is that valuation alone won't drive out performance. It's the combination of improving fundamentals, Fed policy, and investor sentiment that sets the stage. Of course, there's a major risk to all of this: inflation. The Fed's go-to metric, core PCE, has been climbing again. If inflation keeps rising and the Fed is forced to pause or even hike again, small caps could struggle just like everything else. This is the single biggest wildcard in the outlook, so investors need to stay alert to inflation data and any changes in Fed tone. Assuming the Fed stays on its current path, here's what we expect in 2025. Analysts forecast 2 more 25 basis point cuts before the year ends. That would keep real rates lower and the yield curve steep, which is historically positive for small cap equities. In that scenario, the Russell 2000 could once again outperform the S&P 500 over the next 12 months. For those looking at individual names, top Russell 2000 holdings include companies like Credo Technology, Bloom Energy, and IONC. Sector-wise, financials and healthcare lead the charge. If you're thinking of taking a position, some of the most popular ETFs include IWM and VTWO for broad small cap exposure, IWO and VTWG for growth, and IWN and VTVW for value. So, who can beat the S&P 500 in 2025? If history is any guide, small caps might be next in line, especially if the Fed stays dovish, AI enthusiasm cools, and investor rotation accelerates. It won't be a straight line. Inflation could derail the rally, and small caps come with their own volatility. But if you're a long-term investor looking to diversify away from mega-cap tech, now may be the time to start paying attention to the Russell 2000. Let us know your thoughts in the comments. Are you adding small caps to your portfolio, or are you sticking with the S&P 500 giants? If you found this breakdown helpful, like and subscribe to Trading Key. We'll continue bringing you insights on where the next big opportunities are forming in the market. Thanks for watching, and see you in the next one.